Hi forex traders, welcome back. My name is Francis. This is Carries Trading Institute. If you are a new viewer on this channel, kindly click on the subscription button and don't forget to hit the notification bell so you stay updated every time I post a video. So let's quickly go to today's episode of the video. Today I'm going to be analyzing the dollar index and foreign currencies, so I show you where the dollar is going and its relationship with the foreign currencies. Remember, we are already in December and this is the end of the year, and so we are going to be seeing a lot of profit taking, and it's going to really affect the volatility you see on the market in this season. So it's safe for you to trade with caution. Try as much as possible to apply maximum risk management strategy in this very season of the year. So this is the dollar index. Remember, every time we come to the chart, there are three things I would like to do. First is I look at the economic calendar. That's forexfactory.com, so I know what's happening on the fundamental basics. I like to outline the high impact news on the economic calendar, forexfactory.com, and then I try to blend timing with price. I try to blend when these high impact or medium impact events are going to happen, and then I look out for how price is going to present itself technically so that I can position myself in line with what's happening on the fundamental basics. Okay, so this week we are seeing that there's going to be a lot of high impact news this week, beginning from today, which is Monday, 12th December. We are seeing that at 8 a.m. there was a high impact news on GBP pairs, that's the pound, okay, or you can call it cable, and we are still going to see the high impact news on 9:25 p.m. on the Canadian pairs, that's the card pairs. There's high impact news. Okay, apart from that, what we see all throughout today is there is a low impact news on the economic calendar. There's nothing much significant today. And then on Tuesday we are going to see a significant high impact news 8 a.m. on the pound pairs, that's the GBP, and there's also a medium impact news. We can still see another high impact news around 12 p.m. and then 2:30 there is a CPI news coming on the dollar. Okay, and then around 11:30 p.m. GMT +1 we are seeing an Australian dollar news coming up, a high impact news. Okay, on Wednesday there is FOMC release conference on Wednesday, FOMC press conference on Wednesday, and then Thursdays a lot of high impact news. So you go through the economic calendar and look out for high impact news on the economic calendar. Okay, so quickly let's go to the dollar index. The first thing I like to do on the dollar index is to determine the directional bias of the dollar using institutional order flow of the higher time frames. That is, I need to know what's happening on the monthly time frame, what's happening on the weekly time frame, and what is happening on the daily time frame. These are the three indexes that tells me where any currency or asset is going to. So quickly let's look at the monthly time frame. On the monthly time frame, we are seeing that the institutional order flow is currently bearish. Why is it bearish? Because we see price showing willingness to take out previous monthly lows. It has taken out the previous monthly low. Currently it has taken out the previous monthly low too. So in the last 3 months we have been repricing into a discount, even though price is currently at a significant institutional reference point. Okay, so overall if you look at where price has traded from, price was previously bearish. We had a shift of market structure, and then price is also price had cleared out liquidity to the buy side. Buy side liquidity has been taken out, but price is reacting off a mitigation block on the monthly time frame. Let me help you see that. This is a mitigation block on the monthly time frame. So price traded into a mitigation block and a sell side imbalance, buy side inefficiency here. This is what happened, and then we started seeing rejections, and price is rejecting to the downside, and price has been repricing to the downside in the last 3 months. So but currently we are at a bullish order block. Okay, so let's outline this bullish order block. These are the places I would like to see a possible reaction to continue the previous buy side movement, or price may likely reprice into a deep discount. So how do I know that? You just use your Fibonacci to measure the entire range. If you use the Fibo to measure this range, so between the high to the low, 50% is equilibrium, below 50% is discount, above 50% is premium. So if I quickly do this, outline the high of the range, okay, low of the range, and then 50% is this place. This is 50%. Okay, let me use this horizontal line to outline the 50% of the entire range. So this is our current trading range on the monthly time frame, and then we are expecting the price should reprice into at least 50% or below 50% of this entire range to be able to give us a repricing into a discount. Okay, so at below 50% we are seeing that there is a level of sell side, there's a level of buy side imbalance and sell side inefficiency, and then there is a lot of liquidity void below 50%. This is why I feel this is the high probability trade. Price should reprice into a discount that is below 50% of this range. So we go to the weekly time frame and look at what's been happening on the weekly time frame. The weekly time frame gave us a shift of market structure. We had a shift of market structure here, and then price traded below this breaker, repriced into the breaker here. Okay, and then price is rejecting of an institutional order flow entry drill here. Price retraded into that, retraced into that institutional order flow entry drill. Price broke structure again, and then price has retraced into a mitigation block or a breaker block, you can call it here. You see that other block here. This is where price retraced into, and we are seeing a strong rejection to the downside. So where am I looking at? Remember, we said we are looking at price trading into 50% or below 50% of the range. So what institutional reference point is significant at 50%? Now this is the line we outlined as our bullish order block on the weekly time frame. So I'm going to refine it here on the weekly time frame. It's the bullish order block on the monthly time frame. I'm going to refine it to the weekly time frame. What are you seeing there? I am seeing that there is a possible institutional order flow entry drill. The criteria for institutional order flow entry drill is here. So I'm expecting that price should trade into this fair value. It has another block. Remember, the most valid order block is the one that has a fair value gap attached to it. So this is another block with fair value. Price should get there. When price gets here, I would like to see, if I see a shift of market structure on the hourly time frames, then I know that this retracement is probably coming to an end and we are going to continue the bullish move. Or if price heavily trades below these levels, then I should expect those institutional reference points below the 50% equilibrium of the entire monthly range. That's what I'm anticipating to see. Okay, so but for now, as you can see, we are bearish on the dollar. Why? Because price broke structure and repriced into a mitigation block, or you can call it a breaker block, on the weekly time frame as well. Then on the daily time frame, let's look at what the dollar is doing on the daily. So on the daily, you can see price has been forming lower highs, lower lows, lower highs, lower lows, lower highs. Price traded into a volume imbalance currently. Okay, that volume imbalance is characterized by the candle wicks. You can see that the candle bodies were not involved. This imbalance is characterized by the candle wicks without the bodies. So this is a volume imbalance. Price traded into that volume imbalance, and then we started seeing downside candles showing willingness to take out the lows of each of these candles. So where are we targeting? We are targeting that price should take out this external range liquidity, the low here. That's our immediate sell side liquidity. Okay, let's label it. This is our immediate sell side liquidity. This is our immediate sell side liquidity. Price should trade into it and subsequently into that weekly bullish order block that has a fair value gap attached to it, or you can call it buy side imbalance, sell side inefficiency. Okay, and I told you I'm seeing an institutional order flow entry drill that may likely unfold to the buy side once price retraced or once price trades into that level. Okay, so for now we are bearish on the dollar. That means if we are bearish on the dollar, we should see bullishness on foreign currencies, all foreign currencies, GBP USD, Euro USD, NZD USD, AUD USD. We should see a level of bullishness on those assets. Okay, so let's look at the 1 hour time frame and see if we can find something significant. So this is the 1 hour time frame. Price traded into that volume imbalance, broke structure, traded into an institutional flow entry drill. You can see it here, fair value gap, bearish order block that has a fair value gap. Okay, and then price traded off. You see an expansion to the downside, repriced into an internal range liquidity, which is another block in this case. You see price break structure, price we traded into another internal range liquidity, fair value gap, another block, and then we are currently seeing an expansion to the downside. So where will I be looking to sell? Where will I be looking to buy the foreign currencies when I see a retracement of this expansion? So I'm targeting an internal range liquidity here. I'm currently seeing a fair value gap here. When the dollar reprices into this fair value, and you can see that it's a buy. When the dollar reprices into this fair value, and as you can see, there is a breaker block there. The last sell candle here that was traded up before price broke this structure, the fair value gap attached to it. Once price retraced into this point, I would like to start buying the foreign currencies. Okay, so this is sell side liquidity, and this is low resistance liquidity run. I would like to see price push down, clear this liquidity, clear the sell side liquidity here, and ultimately trade into that weekly time frame sell side liquidity. So this is it on the dollar. We are bearish on the dollar. Okay, DXY is bearish. We should see bullishness on foreign currencies. So let me quickly analyze two foreign currencies for you, so you see what's likely to unfold on Euro USD and other associated assets. So let's just go to the daily time frame, since we're anticipating bullishness on the Euro USD, or rather foreign currencies. So this is the weekly time frame of the Euro USD. I would like to see a repricing into this sell side imbalance, buy side inefficiency, or the buy side liquidity here, and ultimately the liquidity void here. This is also a mitigation block. Price may likely trade into this old low before we start seeing the sell side delivery. Okay, so let's say this is buy side liquidity. Buy side liquidity. Okay, that's what we have here. So just go to the 1 hour time frame. So on the 1 hour, you can see what's been happening. Price broke structure, traded into an internal range liquidity, expansion, internal range liquidity, broke structure again, price traded into internal range liquidity, which was another block here. In this case, other block, price traded into it multiple times. Okay, and we are now seeing an expansion. Where will I be looking to buy this? I'll be looking to buy when I see price retraced into this very level, fair value gap. But don't forget, there's a breaker block on the left. Why is it a breaker? Because I see an up close candle before the downside that was broken to the opposite direction. Once price trades into that, I'll be looking to go long on Euro USD, while the dollar continues the downside movement. Okay, so on the 15 minutes, what can I see? Speed. So this is the 15 minutes. Like I said, I'm looking to go long when I see price trade into this hourly level. okay, that discount of this entire range. Once price trades into it, I'll be looking to go long on Euro USD. Let's quickly analyze the GBP USD too. So as usual, let's check the weekly time frame. So you can see that the weekly time frame price is currently expanding to what is a level here that we should see price trade into. That sell side imbalance, buy side inefficiency here. The last sell that happened before this expansion, I would like to see repricing into that level. Okay, then go to the daily time frame just to have a glance of what that looks like. You can see that level there. And then on the hourly time frame, I can see that today price opened, and previously we saw a shift of structure. Price traded into other block, internal range liquidity, which is the breaker block here. Let me outline it here. In this case, it was the breaker block that supported price. Okay, it was retested twice or 3 times, I think multiple times here. So, and then we see this expansion to the buy side. Where will I be looking to go long? I'll be looking to go long when I see price retraced into this fair value gap. The fair value gap here. I'll be looking to go long, guys. I see price traced into that fair value. I will be looking to continue long on GBP USD. So guys, these are my thoughts on the dollar index and foreign currencies. If you like what I just did, I'd like you to subscribe to this channel, hit the like button, and don't forget to share this video to as many traders you like to learn from. Next time, I wish you good luck, good trading.